Ondas Inc. stock is trading right now at $9.31 per share during this live session, down 3.11% intraday on heavy volume. While a daily drop like that might seem like a straightforward setback, what the broader market is completely missing right now is the massive structural shift happening underneath this ticker. Just a few days ago, the company filed a massive resale prospectus tied to insider block sales, and their chief executive officer recently moved over $31 million worth of equity. At the exact same time, they are quietly positioning themselves as the critical software backbone for autonomous defense systems in Europe through a brand new joint venture called ONDS, while preparing a massive rollout of their new Leidos command system in Paris. This sets up a massive tug-of-war between short-term technical selling pressure and a rapidly scaling defense tech backlog that most retail investors simply are not tracking yet. The common belief holding down the stock at this exact moment is that the recent run from the single digits up toward the $13 mark was nothing more than a speculative retail-driven bubble that is now losing air. If you look at mainstream investing sites or browse through generic individual brokerage accounts, the consensus narrative is that an expensive micro-cap drone company is experiencing a classic insider exit after a massive momentum surge. But the reality challenging this view is found inside their skyrocketing revenue curve and their balance sheet. We are looking at a business that just posted over $50 million in quarterly revenue, showing a multi-year growth trajectory that scales past 180%. They are sitting on over $1.4 billion in cash and short-term holdings, which gives them a current ratio of nearly 11 to 1. This is not a fragile, cash-burning startup struggling to survive. It is a heavily capitalized defense asset aggregator that is deliberately being repriced by institutions. When you look closely at the intraday swings we are seeing today, the trading volume is telling a very specific story about institutional liquidity. Ondas Inc. is experiencing a classic digestion period after two massive news-light spikes in May that caught short sellers completely off guard. The stock ripped over 20% in a single day back on May 14th to cross the $10 mark, and then did it again on May 28th to hit nearly $13. When a stock moves that fast without a direct press release, it usually means institutional accumulation is happening behind the scenes, or large options positions are forcing market makers to buy underlying shares. However, when the company filed its Rule 424 resale prospectus, it signaled that a large holder was preparing to bring a significant supply of shares to the public market. That impending supply is exactly what caused the 13% drop on June 3rd, and is continuing to cap the upside today as the market absorbs those blocks. This type of price action is exactly why retail traders using standard online investing platforms often get wiped out. They buy the top of the momentum spike, see a headline about executive sales, and panic sell right into the hands of institutional buyers who are playing a much longer game. If you look at how people trade high beta technology names on a Robinhood stock trading app or through self-investing tools, the reflex is always to chase the green candles and fear the red ones. But if you analyze the order flow on an interactive brokers platform, you can see that the block trades are happening in a highly structured manner. The recent sale of over 2 million shares by the chairman was a massive liquidity event, but he still retains over 4 million shares, keeping his personal wealth deeply tied to the long-term performance of the equity. The market is temporarily treating this as a sign of weakness, but a well-capitalized balance sheet with virtually zero net debt means the company has the financial runway to execute its aggressive acquisition strategy without needing to dilute shareholders at these lower prices anytime soon. Understanding this dynamic requires looking at how the entire defense and autonomous technology sector is being valued right now. We are seeing massive capital inflows into companies that provide mission-critical connectivity and automated security, driven by global macroeconomic pressures and shifting defense budgets. While mega-cap equities like Tesla stock, Apple stock, or Nvidia stock capture all the mainstream financial headlines and dominate traditional individual brokerage portfolios, smaller, specialized defense tech firms are growing at a multiple that far outpaces the broader indices. Many retail investors who rely on passive vehicles like a Schwab Intelligent Portfolios account or generic Fidelity ETFs miss out on these microcap expansions because automated robo-advisors are built to track stable, large-cap benchmarks rather than high-growth defense contractors. To really understand what Ondas Inc. actually does, you have to look at how they have structured their dual operating model. The company operates through two distinct segments, which are Ondas Networks and Ondas Autonomous Systems. The Networks division is built around their patented FullMax software-defined radio platform. This is a secure, private, wide-area broadband network designed specifically for mission-critical industrial applications where public cellular networks are completely unacceptable due to security or reliability risks. They deploy this technology across massive old-line infrastructure sectors, including major freight railroads, electric utilities, oil and gas operations, and public safety frameworks. This side of the business provides a steady, high-margin stream of recurring revenue through long-term software and hardware maintenance agreements, creating a highly predictable financial baseline that supports their more aggressive growth initiatives.
The second and more volatile side of the business is their autonomous systems division, which has been driving the explosive valuation adjustments we have witnessed over the last several quarters. This segment focuses entirely on autonomous aerial systems, advanced robotics, and counter-drone technologies for defense and homeland security markets. Their core products include the Optimus system, which is a fully automated drone-in-a-box platform designed to operate continuously without human pilots on site to secure critical infrastructure, and their specialized counter-UAS platforms. They have built an impressive suite of interception assets, including the Iron Drone Raider, which can autonomously track and neutralize small hostile aircraft in midair using physical nets rather than explosive countermeasures. They also utilize advanced cyber and radio frequency platforms, like the Centric system, to detect and track unauthorized drones in highly complex urban environments. Comment below how many shares of Ondas Inc. you currently hold in your portfolio right now, or if you are keeping it on your watch list for a lower entry point. The massive disconnect between the current stock price and the underlying corporate development is perfectly illustrated by their international expansion strategy. While domestic traders are focused on short-term insider sales, the company has spent the early part of this year executing a brilliant European consolidation play. They completed a massive joint venture agreement with Heidelberger Druckmaschines AG to form a new entity called Onberg Autonomous Systems. This partnership effectively combines their battle-tested American and Israeli drone defense software with over a century of precision German engineering and mass production infrastructure. They are actively transforming a major manufacturing facility in Germany into a European center of excellence for autonomous defense systems, specifically targeting immediate high-volume deployments to protect critical infrastructure in Germany and Ukraine. This gives them a direct, politically protected pipeline into the expanding European defense budget that traditional American microcaps simply cannot access. Furthermore, their upcoming product launch at the Eurosautory exhibition in Paris represents a major catalyst that the market has not priced into the current stock movement. They are officially unveiling LADOS, which stands for Layered Autonomous Defense Operational Command and Control System. This is not just another piece of hardware. It is an overarching software architecture designed to act as the primary operational system of systems layer for multi-domain autonomous warfare. It integrates sensors, platforms, and effectors from multiple different operating units into a single command core, utilizing a Palantir-powered software engine to enable long-range intelligence, surveillance, and reconnaissance missions. When a company successfully transitions from selling individual hardware units to licensing an enterprise-level AI-driven command and control software platform, their gross margins shift dramatically upward, which is exactly why institutional analysts maintain a consensus strong buy rating on the stock, with price targets stretching well above $20 per share. When you look at this through the lens of expectation versus reality, the short-term outlook becomes clear. The market expects continued downside pressure as the shares from the resale prospectus hit the tape, and technical traders react to the broken momentum structure on the daily chart. But the reality is that the underlying business is scaling its quarterly revenue at a triple-digit clip, backed by a massive cash reserve that insulates them from high interest rates or macroeconomic tightening. If their European joint venture begins delivering formalized order volumes over the summer, or if the LADOS platform secures major defense ministry contracts following its Paris debut, the current valuation near $9 will look incredibly cheap in hindsight. For investors managing their own wealth through self-investing strategies or utilizing interactive brokers trading platforms to hunt for alpha, navigating a stock like Ondas Inc. requires separating daily tape volatility from long-term commercial execution. If you are constructing a diversified long-term portfolio using a Fidelity brokerage account or managing retirement assets through Fidelity IRAs, you are likely looking for stable compounders or broad market Fidelity mutual funds to form your core holdings. But for the speculative high-growth portion of an individual brokerage account, finding a company that sits at the intersection of critical infrastructure security and autonomous defense software with a clean balance sheet is rare. The technical risk remains high due to the recent price swings and insider distribution, but the structural demand for autonomous security platforms suggests that the underlying business reality is positioned to eventually overwhelm the current market narrative. To wrap everything up, today's live drop to 931 is a direct reflection of short-term technical supply meeting a market that is temporarily blind to upcoming defense tech catalysts. The expectation is that the stock is deflating after a speculative run, driven by executive sales and a complex resale filing. The reality is a company with a $1.4 billion cash buffer, triple-digit revenue growth, and a newly minted German manufacturing alliance designed to feed the European defense pipeline. The tension between these two forces is exactly what creates opportunity in the microcap space, and how this gap closes over the next 2 quarters will ultimately determine whether this stock can reclaim its recent highs or continue to frustrate short-term momentum traders. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Bags and bots. Don't forget to like, comment, and share this video to support the channel.